Now we have this case scenario number 16, which is on clubbing provisions. Mr. Rajesh gifted 15 lakh rupees to his wife Ravi on her birthday on 23rd February 2022. That means last year. That means gifted on financial year 21-22 ending. Ravi lent 6 lakh rupees out of the gifted amount of 9 lakh of 15 lakh rupees to Karuna on 1st April 2022. February 22 it was gifted, and out of 15 lakhs 6 lakhs is given as rent, given as loan on 1st April 2022 to Karuna for 6 months, on which she received interest of rupees 30,000. Now this 30,000 rupees will be clubbable in the hands of Rajesh under section 64 subsection 1 clause 4. The said sum of 30,000 was invested in the shares of a listed company on 18th October 2022, which were sold for 66,000. 30,000 acquired, shares acquired for 30,000 and sold for 66,000. How much will be short-term capital gain? Why short-term capital gain? Because purchased on 18th October 2022, sold on 25th March 2023. Therefore, short-term capital asset, therefore short-term capital gain. Gain will be 36,000. How 36,000? 66 minus 30. 36,000 will not be clubbed. This will be called as income from accretion to the asset. Income from accretion. And since it is income from accretion, this 36,000 will not be liable to be clubbed. It will be taxed in the hands of Ravi only. Taxed in the hands of Mrs. Ravi. This cannot be clubbed in hands of Rajesh. What will be clubbed will be only interest income 30,000. Any further investment out of this clubbable income will not be liable to be clubbed. Securities transaction tax was paid on purchase and sale of such shares. However, this is immaterial. This is material only for calculation of tax liability. So this 36,000 will be covered by section 111A because STT has been paid. It will be taxed at the rate of 15%, but tax calculation is not asked in the question. The balance amount of gift. How much will be the balance amount of gift? 15 lakh rupees were gifted, 6 lakh rupees were lent. So balance amount of gift was 9 lakh rupees, was invested on 1st April 22 as capital by Ravi in her new business. Now, as per explanation number 3 to section 64(1), explanation 3 states that whenever spouse is gifting money to another spouse, then position is to be, and the other spouse is investing as capital in the business, then position is to be seen as on 1st April of the relevant financial year. So 1st April 22, Rajesh gifted in February 22, financial year 21-22, Ravi has invested in business on 1st April 22. That means income from this business, positive or negative, will be liable to be clubbed in the hands of Rajesh. She suffered a loss of 22,000. 22 I am putting in bracket in the business in the financial year 22-23. This 22,000 will also be liable to be clubbed in the hands of Mr. Rajesh. So in the hands of Mr. Rajesh, two things will be clubbed from this gifted amount: interest of 30,000 and 22,000 negative income. Okay, Ravi is working with a private company as a sales executive at a salary of 62,000 rupees per month. She paid 3,500 per month towards tuition fees for her daughter Ria studying in St. Thomas School, Mumbai. 3,500 per month into 12 months. This will be eligible for deduction under section 80C. Will be 42,000 rupees. Will be eligible for deduction under section 80C if she does not opt to be governed by section 115 BAC. If 115 BAC is opted, then this chapter 6A will not be allowed. Rajesh is working with an MNC on a monthly salary of 64,000 into 12 months. He has gifted 1,25,000 to Ria, their minor daughter, on 13th birthday. Okay, this amount is deposited as 2 years term deposit with State Bank of India in her name, on which interest of 11,500 was earned during the previous year 22-23. So 11,500 will be clubbed in the hands of parents. Which parent? Either of the parents. Clubbable under section 64 subsection 1A. It will be clubbed in the hands of that parent whose other income is greater, either Rajesh or Ravi. And then there will be exemption under section 1032 available to that parent in whose hands this income is clubbable. It will be available up to 1,500 rupees per annum, provided 115 BAC is not opted for. Further, it clarifies both Mr. Rajesh and Mrs. Ravi opt to pay tax under 115 BAC. If they both opt to pay tax under 115 BAC, then this 80C will not be allowed to Ravi, and this 1032 exemption also will not be available to that parent in whose hands Ria's 1,25,000 income is clubbed. Not 1,25,000, 1,25,000 is a gifted amount, interest is 11,500. What will be clubbed will be 11,500. Based on the facts of the case scenario given above, choose the most appropriate answer. 16.1, in whose hands the interest income received from Karuna, that is 30,000, and interest on fixed deposits in the name of Ria would be included. Interest on fixed deposit in the name of Ria is 11,500. So for this 11,500 we will have to find out whose other income is greater. But as far as interest from Karuna is concerned, this will be clubbed in the hands of Rajesh. This is for sure. Now we will have to first calculate income of Rajesh and Ravi both. Let's just understand once again. Rajesh is working with MNC, his salary is 64,000 per month, whereas Ravi is working with private company, her salary is 62,000 per month. Now none of them will be getting standard deduction of 50,000 because they both have opted to pay tax under section 115 BAC. Okay, and then apart from 64,000 per month as a salary, Rajesh will be having these two clubbed income also. When we say which parents other income is greater, so we will have to consider this income also, which is clubbable in the hands of Rajesh, 30,000, and also this particular income of short-term capital gain, which will be taxable in the hands of Mrs. Ravi, 36,000 short-term capital gain, and we'll also have to consider this loss of 22,000, which will be clubbable in the hands of Rajesh. So I have jotted down the details here for Mrs. Ravi. Salary income, whose other income is greater, we'll find it out into 12 months, 7,44,000, no standard deduction because opting for 115 BSc, and short-term capital gain of 36,000, that is 66 minus 30, will also be taxed in the hands of Ravi, will not be clubbed in the hands of Rajesh because this is income from accretion to the main asset. And as far as Rajesh is concerned, his salary is 64,000 per month into 12 months, 7,68,000. Standard deduction again will not be available because he is also opting for 115 BSc. But Rajesh, apart from the salary, though salary income is greater of Rajesh, then also after clubbing we'll see the position. 36,000 after adding total income of Ravi will be 7,80,000, but for Rajesh, under section 64 subsection 1 clause 4, income of spouse to be clubbed in hands of Rajesh, two types of income. One is positive income, interest from Karuna, 30,000, and business loss of Mrs. Ravi. Now business loss cannot be set off against salary, but can be set off against this income from other source, 30,000. 22,000 is a loss. 8,000 rupees will be finally clubbed in the hands of Rajesh. Rajesh's income becomes 7,76,000 and the total income of Ravi is 7,80,000. So in whose hands Ria's income will be taxed? Ria's income will be clubbed in the hands of 11,500 will be clubbed in the hands of Ravi. 1032 exemption of 1,500 rupees will not be available because she is opting for 115 BAC. So answer to 16.1 is interest income of Karuna to be included in hands of Ravi, and interest on 2 years. This is wrong answer. Interest income of Karuna to be included in hands of Rajesh. This is correct answer. Interest on 2-year term deposit to be included in hands of Ravi. D is the correct answer. Let's check what's Institute's answer. Our answer is D. Institute's answer is also D for 16.1. Our answer is correct. Now 16.2. In whose hands the loss from business and capital gain would be included in the AY 23-24. Loss from business is 22,000 and the capital gain income is 36,000, which we have already calculated above. Assume that capital invested in the business was entirely out of funds gifted by her husband. That means there was no further funds invested by Ravi on her own. So in this situation, what will happen? This will be included in the hands of 36,000 will be included in the hands of Ravi, and this 22,000 will be taxable or will be clubbed in the hands of Rajesh. Both loss, A answer is wrong. Both loss, B is also wrong. Loss from business, C is loss from business included in hands of Rajesh, and capital gain included in hands of Mrs. Ravi. This is the correct answer. Last is loss from business included in hands of Ravi and capital gains included in hands of Rajesh. This is the wrong answer. Our answer is C. Let's check what's Institute's answer. Institute's answer for 16.2 is also C. Our answer is correct. Now 16.3, what would be the total income of Mrs. Ravi for the previous year 22-23? Her total income we have already computed. Her total income will be 7,80,000 plus 11,500 of Ria. Total will be 791,500. Let's check whether this is one of the option or not. Yes, C is the answer, 791,500. Our answer is C. Institute's answer is also C for 16.3, 791,500. Now 16.4. 16.4, what would be the total income of Mr. Rajesh for the previous year 22-23? Rajesh's income we have already computed, 7,76,000. 7,76,000 is option A. Institute's answer is also option A, 7,76,000. Our answers are correct. With that, this case scenario 16 comes to an end. See you in the next video with case scenario number 17.